Today, we are going to be delving into one of the most valid critiques of Palantir and its future, and I think this is a pivotal point on Palantir and its ability to grow. I think some people are uncertain of it, and that is Palantir's ability to scale. We know they are not a consultancy, but there's something more beyond that. How can Palantir scale when A, they don't control the data, and B, when they have to send out a forward deployed engineer to get everything set up for the platform? So I will be sharing a clip from Emmett Peppers and Matt Smith, who run Good Soil Investments. You can look at their returns right here, a cumulative return that is just staggering. They've done very well on Tesla in the past, and I'm sure their performance got hit at the beginning of this year. They're big into other growth names as well. In this video, I'm going to be showing you a clip from them talking about Palantir, and they bring up a really good point. However, as you know, I will be countering that with an answer from none other than CodeStrap. So this video is going to be very important, and it really could make or break Palantir's long-term future if they are able to execute in what I lay out here in terms of their long-term growth rate. This video is brought to you by Masterworks. More on them at the end of the video. So here we are. I'm just going to go ahead and play this clip from Matt and Emmett, and then I'll be back to explain what they mean and what it means for Palantir.
A lot of people love Palantir, and I've tried to dive into it a little bit, and I understand conceptually the three-word elevator pitch, making sense of big data for governments or whatever is their top clientele. But, I don't understand it well enough. And I definitely don't understand the whole space well enough to really have conviction on Palantir. It might be one of the best companies. Like, I know there's a huge like community of Uber bulls on Palantir, but personally, I'm just not there. Do you have any thoughts, Matt?
I kind of get the bull case, but Palantir doesn't actually own the data. So how transferable are any of their kind of learnings that they get from one company? How are they going to translate that to another company or another branch of a government, for example, when they're not actually in charge of it or owning the data? Yeah. So that's a concern. Another concern is like the TAM for government contracts doesn't 10x over 5 years. So how do they expand kind of beyond just government? There's kind of renewed concern around government procurement policies may be changing, because the concept of having strategic redundancy, where you don't want to be relying on like one monopoly service provider to do everything for you in government. You want to have backup options. So, in some ways, if they're super successful, they can become a victim of their own success, where, the government will need to have backup options. So, but all that said, I'm willing to be wrong on that. It's certainly possible that I'm wrong, and maybe it is going to the moon.
Okay, so just on that last point of government, it seems like they're almost thinking that Palantir is much more of a government contractor or something of the like. But we know that Palantir's commercial side is spun up and much more recently has taken share of their overall revenue. And now Palantir is pretty much half and half government and commercial. So it's really not just about government contracts, and they're also concerned if Palantir can scale those government contracts. But that's not what I want to get into in this video. I just wanted to bring that up. It is a valid critique, and this is coming from people that think critically about companies before they invest in them. They're doing their best to limit the bias they actually have when they look at a stock, unlike some other people that we know of in the finance community. Anyways, before we get started on diving in to explain how Palantir can scale without having the data themselves, which is very critical for their business and their business model, let's talk about this graphic that I purpose designed for Palantir, which I call the Palantir Flywheel. So we know Palantir has 3 actual stages of their business model. The first is the attract, which is when they go out and they entice prospective clients. They go out and make sure this is a relationship worth having on the commercial side. And this is when they're actually having a negative contribution margin, meaning they're actually losing money on setting up a program. But then they get to the engage, where they onboard existing clients and they get them set up in the organization. They've sent out the forward deployed engineer, and they're actually hitting break even on their contribution margin. But this is really not where they're going to make money. Where they're going to make money is when they actually deliver. The acquire goes to the expand, goes to the scale phase. So once they hit the scale phase, they deliver and they generate client results. They scale throughout the organization. So the very important question is, how can Palantir actually scale? How can they scale when they need, right here, when they need a forward deployed engineer, a software engineer out there to get the platform set up? Well, the way that it works is that forward deployed engineer is only there to customize the initial setup of Palantir Foundry. And maybe they're used as well for expand phase to distribute the software throughout the organization to other departments and the like. But once you get to the scale phase, even having just a forward deployed engineer there or on call, it really doesn't matter. It's not going to make a meaningful difference because once you're scaled up, the contract is in place, the software is delivering results, and Palantir is getting paid. That is what matters most, is getting to that point. So I just wanted to mention that first, and here is CodeStrap with a more technical answer to the question of how can Palantir still succeed when beyond just one company, because right now we're just looking at what Palantir does with each company or commercial partner, when they're looking to go even beyond this scale phase, when they're going to actually utilize the work they've done with the forward deployed engineer, they're going to spin it out this way. They're going to bring some of that code base into the next client. So here's CodeStrap explaining what that means and how it's possible when Palantir doesn't own the data.
What is data used for in the context of data-driven decision making? And yes, we need data to train models, but what we have to realize is no one's starting from scratch typically on a model anymore. You get a base model that's already been trained on public data sets or used in some other environment, and then you tune that model to your specific data set, your domain. Now, if I'm Palantir and I'm building a partnership with Hyundai Heavy Industries, specifically to sell to all of the people that work in similar domains, I can reuse those base models without ever needing your data. So maybe I've trained it on the base models that are relevant to that industry on one data set. They're still relevant when I go to customer B over here. I can take that base model and put it into the archetypes feature of Foundry and then retrain it on the customer's data over here. And that's hugely valuable, right? So models are portable. Think of models as like a bunch of finely tuned weights that tell you about the neat interactions between data. Once you have that tuning done, you can take it with you. You don't need the data to take it with you. Okay, so like, I think that's what people sort of don't understand, is that the base models and all the machinery to make the base models, which include things like feature engineering, is way more valuable. It is true that most of the man hours that go into a data science project are around like data labeling problems and getting your data ready for actual training. You know, when you're going to like tune those base models, most of the time is spent in that, but that's largely been outsourced to things like Mechanical Turk and to these other companies that just specialize in data labeling. That's all they're doing. They literally don't need the data. They don't need to do the mundane work of data labeling. They can outsource that. What they really want are the feature engineering tools and base models that are applicable across a whole industry. But that's what they're getting in these partnerships, I'm assuming. I'm assuming that when they write these partnerships, part of the IP agreement is that they can take the base models without the customer data and reuse those in their archetypes and reuse those for future customers. I think that's where they're going to get a lot of downstream effects.
So it's very important that Palantir doesn't need the client's data to be able to utilize their work, all their hard work on the software engineers that are customizing the solution. It's actually once they have the base model that can then be applied to other companies. So Palantir's work and all that they're spending with one company can be applied to other companies as well. And that doesn't compromise the security of that data of that specific company. It's about tuning the base models so that those specific results deliver alpha, as we're talking about down here for the deliver. So one final thing I want to bring up is what's going to actually happen to the margins when Palantir is able to go from the acquire phase to the expand phase to the scale phase. Well, what happens once they get a client in the door and they're working well, it's a good partnership, they move to the next phase and then they move finally to the scale phase, as we talked about before. And that also means with their retention so high, most of their revenue is going to be coming from these higher margin endeavors, such that their acquire phase isn't actually costing them that much. We see the negative contribution margin, but since there's more just deal volume up here, the margins are much better. So as Palantir acquires more partners in the future and expands them all the way up to the scale phase, their margins are only going to continue to improve because of the flywheel I was just showing you. And this is very exciting for Palantir's future, because the more clients they bring in, the higher their margin will go. Or should I say, the more clients they bring in that get to the scale phase, the higher their margins will go, because of how long their contracts last for, usually around 6 years or so, and how sticky the product is. So it's very important that you understand that Palantir can scale. It's just a matter of executing on that scale. And these are critical questions. I thank Emmett and Matt for these questions because they are really important to understand as Palantir investors and to see if we get any more information on them over time so that Palantir can grow faster, or maybe they're under their growth rates for some reason. It could have something to do with the product over time changing, but I can't underscore enough how many times I see potential investors saying, oh, Palantir can't scale. I find it troubling to see how fast Palantir can scale. But the thing is, they don't need an infinite number of forward deployed engineers. There are only so many companies that would want to adopt Foundry. Palantir's TAM factors in 6,000 of those Fortune 500 companies or so, such like that, moving down market into smaller companies. 6,000 companies is a 20x from where they are today. And that doesn't mean they need anywhere near 100,000 or whatever forward deployed engineers. The fact of the matter is, as I see it, is that the forward deployed engineers, their work is very important, but Palantir is working on implementing tools such that the forward deployed engineers aren't even needed moving forward in some cases. But of course, for bigger clients, you want to provide that best service as you can when it is necessary or they need help with something. And if you've enjoyed this video, please do leave a like. And everything mentioned in this video is uncertain. Growth rates, growth factors, market acceptance, moats, and a company's future. After all, picking individual stocks is a risky endeavor, and investors face a dilemma in today's market. Inflation is at a 40-year high, the Fed is tightening up, and top firms predict returns under 5% for the next decade. No wonder a recent JP Morgan report declared alternative assets are no longer optional. And of all the platforms for alternative investing, there's one that's a no-brainer. It's called Masterworks. Masterworks has solidified itself as the platform for investing in contemporary art. You can access exclusive investments from names like Banksy and Picasso for just a fraction of what billionaires pay to diversify their portfolios. Since 2020, Masterworks has sold 3 paintings, with each returning over 30% net IRR to investors, and their new offerings usually sell out in hours. 30+%. That's wild. If you want to get in early, go to masterworks.io, create an account, check out what they have, and invest in their offerings. And as subscribers, you get to skip the waitlist with the special link in my description. Go check out Masterworks and let me know what you think. Until next time.